Well, good morning, ladies and gentlemen. I should say good morning, of course, I mean to those of you who are with me on the East Coast time zone, the Eastern time zone. I also want to say, of course, well, I meant good afternoon, but sorry, good afternoon, right at 12 noon. Good morning to those of you that are joining us from the Central time zones, the Mountain time zones, and the Pacific time zones. And, of course, you also want to say good evening to any of you who are joining us from across the pond out of parts in the UK or Europe, and good early morning to those of you who may be joining us from parts of Australia, of course, or parts of Asia. Welcome to today's presentation for using the PowerOptions tools for radioactive trading. Now, for this presentation, that's a promotional email you received, the invite email that you received. We invited people who, we invited investors, I should say, who are currently maybe just downloaded the sketch or just got introduced to radioactive trading. Those of you who purchased the blueprints, those of you who may have been using the Fusion subscription before or tried the Fusion subscription before at radioactive trading. So we have a wide range of different types of investors who have different levels of familiarity with radioactive trading. But we're going to do a broad overview and some in-depth overview as well, sort of appeal to everyone. And MG says good morning from Arizona. Well, good morning, MG. Welcome to the presentation. Well, to get started, what we first want to do is just discuss what is radioactive trading. Most of you are familiar with this, but radioactive trading is a complete methodology developed by Kurt Frankenberg. Kurt, about 10, 11 years ago, had attended a weekend seminar to learn how to trade covered calls. And shortly after that, he went out and following his guru's advice, he had a couple of successful months of trading. And then the third or fourth month, he ended up losing everything because he made some mistakes. He practiced some no-nos, but he was just following his guru's advice. So he ended up losing everything he had set aside for trading. But he didn't give up. He started researching different forms of investing. He still believed in the market. He still believed there would be bullish cycles, and started to realize that he was going to have strings of winners and losers no matter what strategy he traded. So what he decided to do was, realizing that the key to success in trading was limiting risk, he started investigating the married put strategy, but then he noticed that there were some flaws with the standard married put approach. So he developed a unique form using a married put position to enter into limited risk positions, of course, that have unlimited upside, but with the put tweaked a little bit differently. We're going to look to go far out in time. We're going to look to have the put a couple strikes in the money. Now, after that position is opened, over time he's developed 10 different income methods that are used to lower the initial at risk and potentially bulletproof the positions. And by bulletproof, that means that we've lowered the cost basis of the total position, stock plus put, to be at a price that's below the guaranteed strike price, the guaranteed exit of that put strike price. And of course, the blueprint details the full method and the 10 different income methods that are used. Now, what is PowerOptions? PowerOptions, of course, is a patented suite of search and analysis tools designed for self-directed options investors. We support over 23 different strategies, including the married put techniques. We had the great pleasure of meeting Kurt and getting connected with Kurt about 4.5 years ago. And after we saw the importance and the benefits of his style of approach that's discussed in the blueprint, we decided to partner up with Kurt, and we enhanced the married put tools, of course, on the site, and also the portfolio tools to work hand in hand. And the tools, of course, allow us to search across the universe of options in less than a second to identify just those positions that match your personal risk and reward tolerance. We also offer powerful portfolio tools to help you paper trade, track, and manage your positions. And then, of course, we have countless educational articles and help pages. Now, this says over 11 years in business. This is actually from a very old presentation. PowerOptions was actually released in 1997, so it's been over 14 years in business, coming up on 15. And everyone here at PowerOptions uses the tools to trade their own personal accounts, myself included. And everyone here on staff at PowerOptions also uses the radioactive trading techniques in their personal account. Now, for those of you who don't know, my name is Mike Chupk. I'm the Director of Education here at PowerOptions. I handle a lot of the coaching sessions in education and customer support, familiarity on using the site, and of course using the tools. I've co-authored 2 books on investing with Ernie, one on naked puts, one on protective option strategies using the different forms of married puts and collars. I am versed in all strategies on the site, and I've been trading radioactive techniques for about 4 years, a little bit over 4 years in my personal account. Now, over the last 4 years, at any given time, my account is primarily made up of 50 to 60% of my invested capital is in radioactive trading positions. About another 20 to 30% is in standard collars. Then about another 5 to 10% of my invested capital is involved in the credit spreads or iron condors perhaps on the broad-based indexes and ETFs. The reason why that the radioactive trading account has made up 50 to 60% of my invested capital over the last 4 years is because I've had more success long-term with the radioactive trading techniques. When I first started out 9 years ago, for about a year and a half I was trading covered calls, and I had the same experience that most of you might have had, where you're doing well for 2 or 3 months, you're making your 2.5%, maybe 3% per month, being right maybe 80-85% of the time on those positions, managing the couple that gets away from you. But then in that 3rd or 4th month, you end up with a 50-50 win-loss record on the 5 or 6 or 10 covered calls you have open, and all of a sudden you realize those 5 or 6 positions that went against you have actually erased all the gains you had from the previous 3 months. You start to manage those and you build back up and you have 3 or 4 months of success while managing your other positions, and then 4 months down the road you have that other maybe 60-40 win-loss ratio, but you realize that your account value is right where you started from or perhaps a little bit below. So it wasn't getting ahead in that year and a half I was trading covered calls. I also after that year and a half, I delved over into calendar spreads and standard collars. And the calendar spreads worked very well for me for the first 6 or 7 months. I had the highest return I've ever had with any strategy trading calendar spreads. But then, of course, the next 2 months after that, I also had the largest losses I've ever experienced with any strategy as well. So that wasn't going to work out for me long term either. I've also traded straddles and strangles, tried to implement long calls and long put trading, and I just didn't have the success that I was looking for. But over the past 4 years, with the combination I have of the married put positions, the standard collar positions, and still using occasionally a credit spread or condor on a broad-based ETF or indexes, I've been able to match my goals over that time period and then not give back to the market, which was always the case with naked put trading and covered call trading, is eventually you have one of those 15, 20, 25% losses that now may take you 7 to 8 months to manage just to get back to break even. Okay? So I just wanted to let you know where I'm coming from and let you know some of my experience, why I'm here and why I'm showing you the tools and why I'm familiar with this technique. Now let's talk about what we're going to cover today. We're going to start off and we're going to look for radioactive profit machines, the RPMs, the initial married put setup, one stock at a time. If you have a stock that you've been tracking and you want to look for protected positions, or if you have a stock in your account that's maybe moved up in price. Well, then we're going to take a look at the search tool, the patented search tool in the married put strategy on PowerOptions to identify positions, some of the things that you can use to help you find positions that match the kind of stocks you want to see and your risk tolerance. And then after that, we're going to show the steps that I use to help analyze and compare the different positions that match my search criteria, run the catastrophe reports and what-ifs. That's what Kurt refers to in the blueprint. You want to run the catastrophe report and the what-if scenarios. And then, of course, we're going to show how to track the positions in the portfolios, management techniques, evaluating the adjustments using the portfolio tools, and, of course, simulate potential adjustments and apply those adjustments in those positions. I'm sorry, Christopher asked you, actively managing funds? No, I personally am not in PowerOptions right now, is not actively managing funds. We're more of a set of tools and support group for self-directed options investors. In the near future, we may have a fund coming out, Christopher. We'll let people know about that, but right now we are not actively managing any funds at this time. Okay? All right, so with all that being said, that looks like a big mouthful. We've got a lot to cover, so let's go ahead now and navigate over to the PowerOptions suite of tools, and let's get started. Now, to begin, if you're just starting out on a trial account or you have a subscription to PowerOptions, when you first log on to your account, you see, of course, PowerOptions is designed as a tab navigation system. The Home tab with different education where you can sign up for the free coaching sessions, Learning Center to view the different webinars and so forth. That's to help you get started. The My Portfolio tab where we track our open positions and can look at management. We'll get to that at the end of the presentation. That tab is also locked in place, as is the Other Strategies tab. In addition to that, we of course have 7 tabs selected here for the different strategies. Well, you can have up to 7 strategies, up to 8 strategies, I believe they're added. But you can customize it and make it as simple as you want or make it as complex as you want. For today's presentation, we're just going to go into the Other Strategies tab. If you didn't already have married put selected, well, you'd want to remove one of these selected strategies and then add married put from the left-hand side of the menu, second to the bottom there. So click that and add to menu. Once you've added it to the menu, we can move it up if we want to be the first on the screen. You can customize the order of the different strategies as well. I'm also going to move collar up to the second position. We probably won't get a chance to look at that today, but just to show you a little bit of the functionality using the arrows there. All right, as I go down to the bottom, let's go ahead and click on Save, and that'll just resave the tab selection for us. Okay. Now, when I want to get started in the Married Put, we're just going to click on the Married Put tab. That just takes us to the main Married Put homepage. Basic overview, quick links to the different tools and a brief description for each one, and then some articles and white papers available here in the Learning Center. Now let's say we've been tracking a stock, we've read about a stock in the news, and we're looking to open a protected position following the rules in the blueprint. All right, so the first step I'd want to do is when I go to the Married Put tab, I'm going to go into the Search by Symbol field. Search by Symbol field just prompts us to put in our stock symbol. For today, I'm going to use the example of PXP. It's a recent RPM that I was in that I've been considering getting back into. Kind of regret that I didn't get back into it maybe a few days ago after today's move up, but that's all right. Now, we have the put expiration month selection. And as I mentioned, if you're following the rules in the blueprint or you've joined us for one of our free webinars, you see that we typically go 150 days out in time to start with. Well, if I've read about a stock in the news or a stock that I want to see what opportunities are available, I probably don't know all of the option cycles, all the expiration dates that are available at this time. So I'm going to leave our put expiration time frame at all months. Now we do have a filter set that you can use here, so you can select less, more, or all. And it's better to start off with less, and then you can always expand that to more. So let's go ahead and start off with less results for PXP. And I'm just going to hit Submit. Now I do know that right away this is going to show me all available expiration months. So we start off with the June series. We have 10 days remaining to expiration. Here's some July series, 45 days out. We also have an August series that's 73 days out in time. But those don't match the base criteria that we want to use when we're starting a new position. I want to make sure I'm going at least 150 days out in time. And we see that the 2 months that we have available, days in parentheses, here I have the November series, 164 days out in time, and the January 2013 series and January 2014 with 227 days and 591 days out in time. So that's where I'm going to start. Now, depending on what kind of time frame I'm looking for. Kurt discusses in the blueprint whether you're going to use the RPM maybe as an income play or if you're going to try to use it as long-term growth. If I'm considering this as more of an income play because I like the premiums that are available shorter term, I'm going to try to focus on the November series first. So what I'll do now is to make this a little bit easier to view. I'm going to scroll up to the top here, and we're going to change our put expiration month to November. And we'll leave less results. We'll go ahead and click Submit. Now, right away, I'm not really fond of a lot of these positions. It is single strike series, excuse me. So we see we have the just out of the money 34 strike, but that carries a 14.8% risk. I'm looking at this category right here when these results first pop up, because we want our risk typically to be between about 3.5% to maybe 9% or so. My personal preference is to be between 3.5% and about 7.5%, but everyone has their own risk-reward tolerance. But I definitely want to be under 9%, and so far these are not solving that view. So what did we mention before? What I'm going to do now is change this from less results. I'm just going to open that up to more results here. Okay, I'm getting a little bit closer. So I have some series now that's, some strikes. We see the November 39 put has a price of $6.60. It's about, let's call it 36. It's about $3 in the money. It has an ask price of $6.60. So if I entered this Married Put right now, my total invested into the position would be $42.59. But remember, we do have the 39 put, so our maximum risk is $3.59 or 8.4%. Now I can go to all results if I wanted to maybe check the 40 strike put, excuse me, or maybe the 41 strike put to see what the risk is. So I'm comparing, based on my expectations, of course, and my risk threshold. Now before I do that, I want to compare, I'm going to add a column, I'm going to add 2 columns to our view, and then we're going to go to all results here. So what I want to do is up at the top in the search by symbol, we can customize the data column. So I'm going to click the See More less columns button. And what I'm going to do, and this will be a little bit more clear when we go into the search tool, of course, but what I want to do is I'm going to add two columns that I want to use. And I'm going to use open interest. I just want to make sure I can see the liquidity there. And I also want to add the percent range in the money. Okay, so there's a particular rule we like to follow. In addition to the risk, we don't want to go too deep in the money because that might lower our expectancy of profit on the position. So I'm going to add those two columns. Just click Save and Return. It's going to prompt me to refresh the page there so we can have those available. Now the reason why I wanted to add the percent in the money in the open interest, well, it does look like there's some good liquidity on these positions out in November. That's a good start. But we're going to go to All Results now, and I want to click Submit. Okay. Now we see a wide range of risks, a strike price in November all the way up to 65 and some different ranges in between. But as a general rule, when we trade radioactively, we typically don't want to go more than 20% in the money. Now this is an interesting view. There's some mixes here. But in general, this one here, the November 43, is probably the highest that I'd go. And these two here, since they don't have any open interest, the prices are a little bit off. They should actually have a lower risk than the November 43, the deeper in the money 47 and 49. But here's that 42, 41, and 40 strike we were referring to. And what I'm looking at here is that the different at risk amounts. So let's just take, we saw the November 39 had an 8.4% at risk, and it's 8.4% in the money. Okay, so higher risk, less in the money. But if my preferences, as I mentioned, was to go between 3.5% to 7.5%, probably just focusing in this range here, and maybe even with this 43 strike put, but that's kind of right at the border. It's 19.5% in the money. That might be a little bit too deep. So maybe the November 41 with a 6.7% risk, which is about 14% in the money, might be around the threshold I'm looking for. But again, this is going to come down to the individual investor. If you're more of an aggressive trader than me and you're interested in PXP, then you might want to be focusing on that particular option that we first saw with the 8.4% at risk, still under 9%, and only 8.4% in the money. You're taking a higher risk, but you need less of a movement now for the stock to get closer to that put strike price. If you're a more conservative investor than I am, you might want to go a little bit deeper in the money and focus on this 5.3% at risk or 6% at risk, depending on your expectation of the stock going forward. Okay, so now that I've compared the different strikes in the month I want, I may choose to go to January at this time and see what the at-risk amounts are for the January, 41 and 42. And again, the selection, if I'm going November to January, is also going to depend on what risk am I willing to take and what time frame do I think the stock's going to move in my desired direction. If I think the stock might be trading around $40 or $41 per share in the next 4 months, only going out 164 days may not be the best choice for me, because that put's going to start to rapidly decay by the time the stock hits my expected target price. All right? Okay, so that's just the search by symbol tool, and then of course we can always compare the different months. Now let's say I did own PXP, that I already own PXP and I have a small gain in it right now, meaning I purchased it a few days ago without a put when the market was in a downturn, and I got it at about $32.50. I want to see what puts are available right now. So what I'll do there is, under the married put now, instead of going to search by symbol, I want to use the insurance tool. And then again, we're just going to be prompted to enter in our stock symbol. So I'm in PXP, and my cost per share, well, it's $32.50. Now, we already looked at the available months, but again, if I didn't know the available put months for PXP, I'd start off with all months here in the buy put and then narrow it down to which time frame I wanted. Did I want the one that's 150 or 160 days out? Did I want to go 200 days out to November or January 2013 or so forth? Since we already know what's available, I'm going to go ahead and go to November and hit Calculate. And now these shows us the different strike puts. Now, as we see up at the top, right now, we have a current gain of about 10.7% on the position. We bought the stock at $32.50. It's trading at $35.99. So we have an unrealized profit of $3.49. And what I see here is if I purchase the November 40 put for $7.25, this is going to increase our cost basis to $39.75, but I've got a 0.6% locked-in profit. which means the position would now be bulletproof. I'm not locking in a lot of that 10.7% gain, unfortunately, right now due to the implied volatility and the high ask price for this particular put option. But now I have 164 days to continue to apply other income methods, and the position is already bulletproofed. And to see that graphically, we can just use the More Information button, and we'll select Profit and Loss Chart. And this shows us the breakdown of our position. I'll increase this full size in a moment, but here's our stock price of $32.50 that we paid, and we could buy the November 40 put right now for $7.25. Okay, and then we have a locked-in profit. The maximum risk now is shown as negative 0.6%, and of course your negative at risk means guaranteed profit, and we see that on the profit and loss chart. There's no break even, and we have no red here, so we have a good gain in the stock right now. We can purchase this put option to bulletproof it and then have 164 days to add other income methods, make other adjustments with the put, following the rules in the blueprint. Now, of course, that's if you wanted to continue to stay in the trade. As you know, if you have a stock that's moved up in price, we have PXP that's gained 10.7% based on that cost basis I entered. Well, the trade-off is if I do nothing, the stock could revert back to $32.50, and I didn't realize any of that potential gain on the position. I didn't protect any of it. With this case, we're protecting some of the gain, or at least making sure we can't lose now, and we still have the unlimited upside profit potential. But of course, if you already have the gain in the stock that you want, you could choose to just sell to close it at that time. But again, that comes down to the individual investor. But when we have a stock that has a gain, we want to protect some of that gain and still have the availability of unlimited upside profit potential and be able to do the different income methods against it. We're going to use this insurance tool here to help us calculate what is our current unrealized profit and how much locked-in profit can we get by purchasing the put options maybe 5 months, 6 months, or 8 months at a time. All right, so those are the two tools, the search by symbol and the insurance tool. If you have a stock, or if you have a stock that has a gain on it and you're looking to protect it, those are the tools you'd use. Now let's go back to the beginning. I don't have a stock that I've been tracking. I haven't been reading the news recently. I haven't seen anything in the news or on Kramer, for example, or anything of that nature that stands out to me as something that I want to invest in. I want to see what stocks exist in the market right now, what Mary puts are available in the market right now for stocks that match my criteria and my at-risk. So to do that, we're going to jump into the patented search tool. Now, when you first open the search tool, you'll see a list of potential trades. These are not recommendations or suggestions. These are the trades that match the default criteria that Kurt uses, that he discusses in the blueprint, and we have set into the parameter field down below on the PowerOptions search tool. This is a great place to start, but you want to make sure that you make some tweaks and make some adjustments based on what kind of stocks you look for, what kind of risk you're looking for, and of course what kind of capital you wish to invest. Very quickly, just as we did on the search by symbol tool, and we'll show this a little bit later, we can customize the result table view by using that See More, Less Columns button. Now, anytime I make a change to the search or the search by symbol results table using that See More, Less Columns button in a given strategy, it'll translate over. So when we added the open interest and the percent range in the money on the search by symbol tool, that recorded that and copied it over for the search tool because the system realized, well, if they're analyzing Mary puts, these are the kind of categories that they'd want, so we want to have it available in both the search and the search by symbol. Well, okay, let's Oh, Peter, I think you just came in late. You just missed some of the discussion on the insurance tool. What the insurance tool does is if I have a stock in my portfolio that's moved up in price and I'm looking to protect it, that's when I'd use the insurance tool. The example we ran on PXP that had that 0.6% locked-in profit, we put in a theoretical price that if we owned PXP at $32.50, where it's now trading at $35.99, that's what gave us the 0.6% locked-in profit. It's a stock that we have in our portfolio that's moved up in price, as you mentioned, and we'll use the insurance tool to help us see if there's any Mary puts out there that will help us bulletproof the position right now and still have that 6 to 8 to 10 months to apply the other income methods and realize a higher income. That's right. In general, and actually, in all honesty, in general and in truth, you'll probably never be able to bulletproof a position starting off from scratch. There's always going to be some risk due to the time value in the put option when you first open a stock plus put together, a new position. But if you have a stock that's moved up in price in your portfolio, you can use that insurance tool to help you find positions where you might be able to lock in some of that profit. Okay, so let's scroll down below the listed trades, and we're going to take a look at the parameter field here. Now, when you first take a look at the parameter field, it may look very complex and it may be very slightly daunting, but you don't want to be overwhelmed by this. As the starting point, as I mentioned, we already have set in there the radioactive default that Kurt uses and Ernie uses as a stepping stone to create his own personal search. And our default settings here, we have the radioactive settings sorted by earnings per share growth, the percent earnings per share growth. That's what Kurt and Ernie prefer to sort their results by, looking for stocks that have the highest earnings per share growth, so for potentially the biggest growth over the course of the next year. But let's talk about the general position. The married put, of course, is based on a stock, buying stock, and buying a put. On our left-hand side, we essentially have the settings that we can use to determine the time frame and the range in or out of the money of our put option. And we start off with all months, and as I mentioned, we're looking for the days to expiration to be at least 150 days minimum. So it has to be at least 5 months out in time to a cap of 900. And you could decrease that to 600 if you want to. It really doesn't matter, but you want to be at least 150 days out in time. And earlier we talked about that percent range in the money. In general, we prefer not to go more than 20% in the money. As you all know, of course, if I buy a stock, and let's say I buy a put that's 50% in the money. So let's just take that example. We bought stock at, PXP at about $36, and we buy a put option, a 55 or a 60 strike put option. Well, the 60 strike put option for the $36 stock is probably going to be priced right around $24.20. Meaning that my total invested would be $60.20. So I'm only risking that 20-cent extra, that 20-cent a time premium. But now to be able to logically apply the income methods and make the adjustments, I'd need the stock to be trading up at around $60 per share. So yes, I'm carrying a much lower percentage at risk if I go very deep in the money, but now my expectancy of potential profit and availability to make the adjustments is greatly lowered. So we don't want to go too deep in the money to sort of force ourselves out of the market or force ourselves into too low of an expectancy of profit. The center section is most of your option information, the monetary max risk or percentage max risk, your option volume today and open interest, the liquidity fields, Black-Scholes ratios, for example, delta, implied volatility, time value for the ask option, bid-ask spread is something that could be used, and the percent to break even. So as a starting point, we just have the max risk set between 3.5% to 9%. We want to keep it in single digits. But again, as I know, my personal preference is to keep the risk between about 3.5% to 7.5%, that I personally don't open an RPM with a risk of higher than 7.5%. I have no statistics to prove that works better than what Kurt or Ernie does. It's just my personal preference. So I'm going to make that change. And maybe I want to look for positions that have a higher open interest. Instead of just greater than 0, maybe I want to make sure that at least 10 contracts have traded on those far-out options over time. Now, very quickly, a lot of investors ask me, well, why don't you ever use delta? I've always heard that you can't be successful in options trading unless you use delta or implied volatility. The reason why is because the way that we're looking for these positions, by the fact that we're limiting it to go no more than a couple strikes or no more than 20% in the money, and we're looking for a risk between 3.5% to 7.5%, I know just by personal experience that this means my deltas are already only going to be in a range between about 0.55 to probably about 0.75 or maybe 0.8 at the high mark. I should really say negative 0.5 to negative 0.75, of course, when we're talking about the put options. And the implied volatility, well, if I was restricting it so I don't want the option to have a very high implied volatility, meaning it would be overpriced, I'm already filtering by that from the maximum risk. If the implied volatility of the option was too high, then the risk would be out of bounds of this 7.5% or 8%. You know, we'd be looking at options with a high implied volatility that might have a risk of 10% or 11%. So even though I'm not using those filters, I sort of am by using this maximum risk field. But of course, if you like to use delta, you like to use implied volatility, feel free to do that. And of course, you know, as we're trading options that are far out in time, we might want to limit our bid-ask spread to be less than maybe 50 cents or maybe less than $1, depending on what kind of positions you're looking for. Now, over on the right-hand side is all of your stock information, stock fundamentals and technicals, stock price, earnings per share growth, price per earnings, dividends. If you wanted to look for dividend-paying stocks, we just put in a minimum percent dividend yield of 2% or 3%, for example. Historical volatility and average stock volume. Well, you notice, although we have 15 to 20 different stock criteria that you could put in to filter by, we only have 3 listed as a default. We recommend looking for stocks that have a historical volatility of greater than 0.25 or 25%, so we want to see some movement on the position. The limit stock price between $9 and $200, and then the average stock volume. This is actually measured in thousands, so we're looking for only those stocks over the last 90 days that average at least 300,000 shares per day. Well, that seems like an open search. Why do we only have 18 results? Here up at the top, you see that those total results are, we had 18 total results on probably 12 different stocks. Well, the reason why is as we scroll down to the bottom, we have this field in the center section for recommended lists. And it's Kurt's preference to look at the stocks in the Investor's Business Daily, the IBD 50, and CanSlim lists. But you could also choose to look at other stock lists if you wanted to, such as the S&P 5 stars, value line lists. If you just wanted to look at indexes and ETFs, for example, really just ETFs, you can select to do that as well. So a lot of that criteria, the things such as the earnings per share growth, price per earnings, some of those other fundamental and technical criteria are already taken care of. They're already taken into account if you select a specific company list. And of course, we want to look for stocks trading in an uptrend, so we do have down here the simple moving average, looking for stocks to be trading above the SMA 50. Now, I did make a couple changes. The bid-ask spread, of course, my risk tolerance, and the open interest there. So let's go ahead and submit these settings. And I may end up with no results. Okay, so we narrowed it down to 3 results. Also, I should mention that one of the first things that I do discuss in a coaching session when I'm talking with a customer or looking at any strategy is, if you look at the defaults here, we're looking at stocks between $9 and $200. Well, you know your portfolio and your investing capital better than I do. And if you know that in general you're not going to be buying stocks that are more than $40 or more than $45 or $50 per share, you just want to change that here on the stock price range. So limit the stock price to what range you would look for. The point of the tool, of course, is to help you save time with your options research and analysis. We don't want to be looking at stocks that may match the rest of the criteria that are in a $150 or $200 range if we're never going to purchase a $150 stock or a $200 stock, for example. Okay, so we have a limited number of results here, and even if I put my listing here, let's say that my preference is that I'm only trade stocks maybe between $9 and $55 per share. If I make that change now, I only have 2 choices here on TJX. Okay, well, if I want to broaden my horizons and open the market up a little bit more, what I might do personally is that instead of using just the IBD 50 and CanSlim stocks, they're good stocks to use. It's a good starting point. But if you think the results are too narrow, that your stock criteria don't match a lot of what's in the IBD 50 and CanSlim list, what we want to do is we can open it up and change this to no list. So technically now we're screening against the entire universe of optionable stocks, ETFs, and indexes, or really optionable stocks and ETFs, to find positions that match our criteria. But what am I going to do now? Now I'm going to use some of those fundamental and technicals that I might use to identify a stock that I feel has the potential to move up in price, maybe 5 to 8% over the next 30 to 60 days, or over the long term. So I might start looking for stocks that have an earnings per share growth of maybe 5, 7, or 10%, meaning they've grown in earnings last year at least 5% or more. PE ratio, I don't want that to be too out of bounds, so maybe I'll use a range of 0 to 40 or 0 to 50. You can also use things such as beta. I'm going to keep the historical volatility, but let's say I want my average stock volume to be a little bit higher. I want stocks to be trading at least 750,000 shares per day on average over the last 90 days. And if you use things such as the PEG ratio, or if you like to use broker recommendations, or even the things such as the RSI or the Bollinger Band ranges, you could put those in as well. All right, so let's go ahead and submit that, see if what we have in our universe. It didn't open it up too much. And of course, TJX still matches our criteria, but we do have a few more selections now that we can look at. They're lower price stocks, but that might be okay. We've got New Gold Corporation, American Eagle Outfielders, DreamWorks actually came up in a search last time, and TJX. Okay, so we've expanded this a little bit. Probably, as you guessed, one of the things that might be hindering this search right now is that filter for stocks that are trading above their SMA 50 based on the last 4 or 5 days of market trading. Okay, so I have my results now. Again, as I mentioned, if we wanted to add other criteria, so we use the price to earnings ratio, we use the average stock volume in our filters. If we wanted to see those in our results for comparisons, we would just use the see more or less columns button. Now, I'm sorting this by the highest earnings per share growth to lowest based on the default setting that was set on the radioactive filters. I could change it, of course, here in the sort results table if I wanted to look for lowest risk to highest or highest risk to lowest. But regardless of how I select that filter to sort my results table, if New Gold is at the top of my list because it has the highest earnings per share growth, am I going to jump right in and make that trade? Absolutely not. I have to do a little bit more due diligence. I know these 4 stocks match my criteria. I know the put combination with that matches my at-risk amount and my open interest amount as well. But I still want to make sure, and I know that they're trading in an uptrend, I should mention that as well, but I still want to make sure that this is a stock that I'd want to trade. So my personal steps now, after I've put in my criteria that match what I'm looking for, I'm going to use the More Information button next to each position. I'll start with the first position. What I want to do is take a look at the chart. And typically I'll just go to Big Charts. And Big Charts, of course, is a free charting service, and you can customize that using different indicators over here on the left-hand side. So I can set things such as the Bollinger Bands. I can set RSI, MACD, fast or slow stochastic. We're not going to get into a discussion today about how people read charts or how different investors will read charts based on what they look for. But what I'm looking at here is, using the different indicators, I'm looking for a stock that I think has the good potential to maybe move up in price 5 to 8% in the next 30 to 60 days. Excuse me. I have a little bit of frog in my throat today, in case you couldn't tell, excuse me. So I'm looking for a position or a chart that I feel comfortable has the potential to move up 5 to 8% in the next 30 to 60 days. Okay? Now, if I'm not happy with this chart for whatever reason, I don't think this is a good chart, or maybe that this recent growth in the last month or so is too quick and that it might pull back later on, then I'm just going to close Big Charts, and I'm just going to move to the second position. I'm not going to do any further research. If I'm not comfortable with the chart, then I am just going to go to the next position. So I'll click on that More Information button again. We'll take a look at the second one, pull up Big Charts, and say, okay, now is this more along the lines of a stock chart that I feel has the potential to move up, that 5 to 8% in the next 60 days or so. Okay, so that's what you're looking to evaluate. Now let's just stay with the first one. Let's stay with New Gold just because it's the first one. Very quickly, let me sidetrack. Pierre came in, said he wants to see the entire presentation, but unfortunately has to leave. Is this archived? Let me do this. Yes. Okay, let me do this very quickly. Hold on one second. I'm sending you all a link. Oops. Yes, there it is. I'm sending you all a link to the public webinars page on PowerOp.com. It'll come through on the chat window. It's powerop.com/webinars.asp. For those of you that are trial members or subscribers, you can access this from the main home tab, go under Learning Center, and then the Learning Center menu, click on Webinars. And Pierre, when you get to the Webinars page, over on the right, you'll see a variety of different categories, such as PowerOptions Tools Archive, Strategy Archive, Radioactive Trading, and then you'll see when there are Power Options for Radioactive Trading. At around 5 p.m. Eastern Time tonight, that's when I'll have this webinar posted in the archives. There's one that's similar to today's presentation already posted there, but that's where you can go to access the webinar. So it's powerop.com/webinars.asp, and then you'll be able to click on the Power Options for Radioactive Trades. This should be up at 5 p.m. Eastern Time this afternoon, I hope. If it's not up by 5 p.m., it'll be up tomorrow morning at around 9:30 or so. All right. So we've run our search. We've got our positions. We looked at the chart for New Gold, and we like the position. Now, some of you who are blueprint owners or have been following the radioactive trading techniques, you may want to look at the 5-line setup. This is just how Kurt and Ernie like to show the position. So instead of looking at the results, you can say, okay, well, we can buy shares of stock at 1025, buy the November 12th put for 270, total invested, and the total at-risk amount and your profit and loss chart. And there's some description down here. So that's just a brief overview of the position, the 5-line setup. If that's what you're used to through the bulletproof modes, you can see that from the more information menu as well. But we took a look at the stock chart. The next thing I always do is take a look at the company information. I want to take a look at the news headlines first. Why? Well, I want to take a look at the news, and I want to see if there's any recent headlines over the last month or so that may cause me hesitation for entering the position. Is there anything such as a boardroom scandal, a CEO catastrophe, CEO maybe selling shares of the stock, anything about a patent lawsuit, anything about, for this position, of course, we know it's new gold, they're probably in the mining operations. Is there any articles about problems with leasing land that they're trying to get for a new mining operation, or is leases running out on some of the land they own that they're currently mining? And then, of course, we also want to check the last earnings events. What have the last 3 or 4 earnings events look like? Have they been positive earnings? You can actually see that on big charts as well. It's always something I want to look at. And, of course, I'm not familiar with new gold. I can kind of guess what it is, but I want to know. So I'm going to take a look at the profile. I'm going to get the background information of the stock and any recent headlines to make sure I'm still comfortable entering this position. And then what are we going to, the next thing you might want to do, if you really want to get into detail, numerical detail for the stock or the option, go into the research tool here and take a look at the stock research. I'll just open this up very quickly. This shows you all of the available data that we have on PowerOptions for the stock. So all of those fundamental and technical ranges, one for each stock position, is listed right there. The last earnings, broker recommendation, for example, and so forth. That's all listed here for you. Next earnings event as well. They don't pay a dividend, of course, and your RSI ranges and things of that nature. So that's all there for you on those positions, okay? And then the option research, of course, shows you the same thing, but just all the available information for the option. Now, after I've made sure that I like the chart, I've taken a look at the company information, the news, and the profile. Oops, sorry, folks. Looked at the research, maybe, perhaps. What I may want to do now is also take a look at the search by symbol. For this stock, a lower price stock, I probably won't do this, but if we were looking at TJX, which has those two price there, stocks at 41.54, we're showing the 45 put and the 42.5. Just as we did before, if I'm interested in this NGD, this new gold position, I want to link over to the search by symbol, just as we did before, because now I want to compare the other strikes. Why didn't the 13 strike come up in my results? What about the 11 strike? That's in the money. Did it match my risk? And this kind of shows me why. This is actually a good example because it shows me the 2 reasons why. The November 13 put and November 14 put, going deeper in the money, do have a lower at risk. So we go to 6.8% and we have 5.1%. But why didn't they match my search results? 2 reasons. Open interest at 0. Remember, we changed that because we wanted at least a 10 open interest. And the percent range in the money. It's 27%, roughly 37% in the money for the 13 and 14 puts. So these don't match my criteria. They're too deep in the money, although they have the risk I want, and they don't have the open interest. And then, of course, the 11 strike put, yeah, it's still in the money. It's only 7.3% of the money, has the open interest I want, but the range is the at-risk amount, I apologize, is too much. It's at 10.2%. So this is the strike I want. This November strike is the one that I'm looking for. And I may want to also look, well, do they have a January series, for example? Let's just see. Select January here. Click Submit. Oh, there is a January series as well. So that November 14, I see here I have the same problem. The reason why the Januaries didn't show up in my results is the 12.5 for January is a 9.1% risk outside of my 7.5% range. And the 14 strike put does have a 6.4% risk, but it's outside of my range in the money. Actually, the 12.5 is too. So it looks like that 12 strike for November is where I want to keep my focus. But I want to run these comparisons. I want to take a look around and see, now that I like the stock, what is my sentiment of the stock maybe moving up in the next 30 to 60 days? Which strike put matches best? And usually, I got to admit, the one that you find on the search that's already in your risk range, already in the money range, it's already there. But never hurts to look at the other combinations and see what might be available. All right, now that I've done all of that, my very last step is I'm going to go to the profit and loss chart because I want to see a graphical interpretation of the position. And what this is also going to allow me to do is we know that if I open this position, my break-even, my static break-even at expiration, if I held this married put all the way to November expiration, made no adjustments, I would need the stock to be trading above $12.95 in order to realize any profit. However, that's not my plan. I can't plan for the stock to move up. The stock's going to do what it wants to, but I don't have to hold it all the way to expiration, and I am going to plan on making an adjustment following the rules in the blueprint. What I also want to show here is that notice that even though my break-even at expiration is $12.95, right about here, and you see that on the chart, the curved red line is showing us the halfway point, 8/28/2012, the halfway point between now and expiration. I don't need the stock to be trading at $12.95. I probably need the stock to just be trading maybe around probably $10.75 or $11 in order to realize a profit. But remember what I said. When I'm looking to open a new RPM, I'm looking for a stock that matches my criteria that I feel has a good possibility of moving up 5 to 8% in the next 30 to 60 days. Well, what is 5% of $10.25? Well, it's really simple. We just take that out and multiply it by 0.05. Okay, and it's going to be about 52 cents. All right. So the stock's at, let's just keep it even. Let's call it 50 cents. The stock's currently trading at $10.25. What I want to do down here at the bottom where it says calculate expected profit and loss, I want to simulate that. Okay, so I'm going to put in $10.75, 50 cents, so a 5% increase, and let's say the next 30 days. Let's just keep it simple, just to the end of June. Let's say around 6/29, if the stock's trading at $10.75, what would our position look like? Well, that's not too great, but it's not too bad. We do have some trade-off here, so we gain $50 on the stock. The Black-Scholes pricing model estimates we're going to lose $51 on the put. I don't know if that's really good to go. Let's go a little bit higher. What happens if it hits 11.25? Okay, so the stock moves up 100, and put would decline about 78 cents theoretically. So that's about $22. In general, you only see the puts decrease about 40 to 50% of what the stock gains. You're still able to keep maybe about 50 to 60% of the gain in the stock price with just the married put. I have a feeling that this low-price stock NGD, this put, is actually a little bit inflated, even though the risk is in my range. It might be a little bit inflated, and that's why these expected losses are coming in here, expected declines. But that's okay. What I'm doing here is I'm trying to gauge a range of where I might set a stop order, not a stop order, I apologize, an alert in the portfolio to potentially do an income method. So instead of having to wait for the stock to maybe already move up to 12, a good point might be 11.25 here when I start realizing a profit. That might be a good opportunity to do an income method number 1 and income method number 3 or so forth. All right, now another thing, a common thing I want to just show real quick that you can use on this, that I use this tool for. You can also go the opposite way. What would happen if the stock dropped 5%? Let's say it dropped down to $9.25 in the first 30 days, or by $6.29. Well, that's about $1. That's too much. Let's put it back to $9.50 here, $9.75. I'm sorry. What happens if it drops 5%? Well, you know, $50 loss in the stock, the put would gain about $11 theoretically, so you'd only have a $39 loss in the position. So you can just kind of gauge what your theoretical win-loss might be if the stock moves up 5% or drop 5% or 10% or so over a set time frame. Okay. Now, common question for those who are used to certain styles of trading that we're all taught from the beginning, covered calls, naked puts, even maybe credit spreads. When you first look at that position, you're saying, okay, I'm buying a stock at $10.25, buying a November 12 put for $2.70, so I have a risk of $95 or 7.3%. Why don't I jump in and maybe sell an 11-strike call right now to try to cover some of that loss? Let me get some of that 95 cents back right now by jumping in and selling the 11-strike. I wouldn't sell the 10-strike because that's already in the money. Okay, well, this tool actually allows you to simulate that before you do it. Now remember, our initial at risk is 7.3%, and I've got a max risk of $95, okay? So what I'm going to do here is click on View Options. I did buy a November 12 put, but we want to simulate, what if I sold a July 11 strike call for roughly 40 cents? A bid of 40, ask of 45. We'll just keep the natural bid at 40 cents. All right, so I'm going to add that in. I just click that. It shows me that it's been added. And we're going to sell one call. Okay, now how does this change our profile? Now there's a problem. There's a big problem. Remember why I got into this position? The research and analysis I did, I was looking for a position that I feel confident might move up 5 to 8% in the next 30 to 60 days, where it might be trading up around $10.75 or maybe $11 in the next 30 to 60 days. Well, that's good, but if the stock exceeds my expectations, I do have a problem. If this stock suddenly gaps up and it just quickly moves up to 12 and then the 13 and the 14, I've seen this happen with these lower price stocks. You just come in the next day, it's at 11.50. You come in the next day, it's opened at 12.70, and then it jumps up to 13.20, before you could make any adjustment. Notice that the at-risk amount now is 12.4%. Well, that's not on the downside. We did reduce our risk on the downside by that 40 cents we collected from the premium. We've lowered our downside risk, but now the risk is on the upside, in the direction we thought the stock was going to go initially. That's why in the blueprint, and when you've seen on those free webinars, we always advocate you don't want to sell a call right away. You don't want to cap your upside and hinder the direction that you thought the stock was going to go in the beginning. So we want to wait for the stock to move before evaluating one of those adjustments, such as income method number 1. It's given away free in the sketch and a lot of the free webinars. But if you were considering getting into this position, you thought, what would happen if I did sell that call right away? I tried to force that income method and generate it right now. Simulate it first in this custom spreadsheet. You'll see exactly what kind of issues you might have. And also remember, of course, your best scenario now is if the stock's trading right at $11 per share, which over the next 40 or 50 days or so would be a 2.7% return. You also have to ask yourself, does that match your goals for this position? Is that the goal that you were looking for? Okay, so it all comes down to analyzing your goals, your expectations, and your risk tolerance. And this now, I don't expect the stock to maybe gap up to $15 or $16 per share, but I know that it could, and this is now outside of my accepted range for risk on the upside. I don't want to do this right now. All right. Let's go ahead and close that. We're back on our search screen. Now remember, once you've set your criteria that you want to use, you can click this blue Save button down here at the bottom, and that will allow you to put in a search name and a description for your criteria. Then you'd click Save this search, and every time you come into PowerOptions, you have your search criteria set that you can always select and toggle back and forth between different saved searches and the default searches as well. So you don't have to do this every time. All right, so now that I've got my stock, I looked at the stock chart, looked at the company information, compared the other strike prices, did a little bit of detailed research maybe, ran my what-if scenarios on the profit and loss chart, not only about the stock moving up or down, or what if excuse me, I sold the call right away or tried to force an income method right away, how would that affect my position? Our next step now, if we're comfortable with all of that, we want to enter the trade. So if we do have a broker link on PowerOptions, right now this goes to Options Express and Brokers Express. You have an Options Express or Brokers Express account. You can set up the broker link so you can enter it as a leg position right away, or you can enter each leg individually. Of course, if you're using a different broker, that's fine. You just log on to your broker, place the trade, place it with your limit order, maybe a limit net debit here of $12.90 or $12.95, whatever you think you can get. But then what you want to do is come back to PowerOptions, and we're going to click Add to Portfolio. We're going to track the position in the PowerOptions portfolio to help you with the radioactive trading techniques. Now, I have a few. Well, let me go back one. If this is the first time you've accessed the portfolio from your trial account or your subscription account, you would only see this choice here for new portfolio number 1. And we could call it paper trades, or we could call it OX trading account, or account number 572, or Roth IRA, whatever you want to call it here. And this would just start you off with an account with $100,000, and you can make adjustments later. Now, following the webinars, we've got a series of position married puts 2012. So we're just going to go ahead and add this new NGD position. This is not a recommendation or suggestion. I'm not going to trade this today, but just an example. We're going to keep it with the other married puts for 2012. Now, when I click Insert, it takes me to the entry page, and it has all the information filled in for me that the system knows. It knows the stock symbol, today's date, the current price we saw on the search screen, $10.19. It actually dropped a little bit from when we were analyzing. It was at $10.25, remember. The put kind of changed a little bit as well. What the system doesn't know, of course, is how many shares. Let's keep things simple, okay? We're just going to do 100 shares of our $10 stock here. I'm going to put in one put option. We're going to leave the transaction date as well. And then, of course, the commission fees. Well, I'm treating this as a paper trade, so we're just going to put in 0 commission fees for the stock and for the put. And then, of course, remember we have the stock at 10.19. If you got filled at a different price, you would just change that to match your values that you got filled on the stock and on the put. And once we're done, we're going to click Submit. And this is going to link the position into the profit and loss portfolio. I want you to note that now we're in the My Portfolio tab, and we have the profit and loss portfolios highlighted. This is where we track our open positions. At any time, I can go back and look at my historical trades, or I can view the analysis historically as well. That's one of the tools I like to use because it gives me the every trade I've made on a particular stock that I've been tracking in the portfolio instead of the historical reports, which are organized by date. So this is organized by stock symbol, so I can see all the positions I did on AUY, for example, or PXP in one view. I also have a snapshot and allocation view and the alert summary, which we're going to talk about in just a moment. Okay, so it added our position into the portfolio. Here's our new position here, NGD, and we have the stock leg first. We have 100 shares, 10.19, and then the current price is 10.19. It hasn't changed, but it's moved up 19 cents today, probably opened at 10. And we have our November 12 put. There's our price at 265. Now we have a loss on the put, and why is that? Well, when I put in this entry, I put in the natural ask price for the put at 265. I didn't change it, but the natural bid right now is 250. So I do have a loss of $15 on the put option. Up at the top here in the settings menu, very quickly, I want you to notice that I have this box checked for view position analysis. It's great to see the individual legs in a strategy such as a covered call, married put specifically, a collar spread. But what's also helpful is to see it as a linked position. So over here on the right-hand side, when I check that box for view position analysis, it adds these 6 extra columns for us so I can view the total position, cost $12.84, that's for NGD position. Our liquidation value right now is only $12.69. It's a loss of $15 or 1.2%. That's just due to the bid-ask spread on the put option. And this future expiration value, we're not projecting what the future expiration might be for this position. All this is saying is that if the stock stays at its current price, 10.19, between now and November expiration, our future expiration value would be $1,200, meaning we'd exercise our 12-strike put, and we'd have the max loss of $84 or 6.5%. Remember, that changed because when we linked over to the portfolio, the price had dropped to 10.19, and we used that instead of the 10.25 we were analyzing on the profit and loss chart. So instead of that $95 loss or 7.3% at risk, it only came out to $84 or 6.5%. So this is just a good view so you can see everything together. Now, we had mentioned earlier when we were using the profit and loss chart, we were taking a look at some of those what-if scenarios. And I said, well, if the stock reached 11.25, there's a point where the theoretically in the next 30 days where the position might be liquidated for a profit, or that also might be a good opportunity to do an income method. So what I want to do now is you see the third column in, we have this column for alerts. I'm going to click View next to our new NGD position, and this just allows us to put in different alerts on the positions. So what I'm going to do is use just the stock price for now, and I'm going to put in a lower limit of 975. I know that seems kind of close, but that's what we saw in the profit and loss chart, of course, when we were evaluating it. And it's a $10 stock, so there's smaller movement we can have there. And I'll put my upper limit 1125, just so it notifies me, hey, when I look at the portfolio, it'll be highlighted in red if one of these is triggered. So I can say, all right, well, the stock's at 1125. Now I might want to analyze doing an adjustment for this particular position. Okay, I can also be notified if I'm within 60 days to expiration. Just in case I forget. In general, I might want to look at 75. Just don't want to let that go all the way to expiration. Oh, and by the way, if you know that simple moving average is something that you use, that you particularly like to look for stocks where they're trading above their SMA 50, which I use in these strategies as well. I may want to be notified if at any time the stock price drops below the SMA 50, that it's changed direction from being above the SMA 50 to below the SMA 50. And you can also set different alerts here for days until earnings, perhaps, or if it pays a dividend, days until ex-dividend, 52-week low, high, and Bollinger Band as well. Well, let me go ahead and click Save, and we're not going to see anything highlighted here, but notice now it did fill in the upper and lower stock limits for me, 9.7 to 11.25. So if the stock drops below that or moves above 11.25, this view column will be highlighted in red for me now to let me know that one of my alerts has been triggered. All right. Now, one of the other parts, we've got a few minutes left. I apologize I went a little bit over. But one of the most important things about the portfolio tool is as you're tracking these positions, we also mentioned that we want to talk a little bit about the management, of course, and evaluating the management techniques or adjustments, okay? So here's a position. There's another position here we did in a webinar about a week ago, about a week or 2 weeks ago, on 5/25/2012, doing a similar presentation, and we came across a position called Gold Fields. And at the time, we saw the opportunity, came up in our search, to buy the stock at 1301 and buy the January 15 put for 289. And of course, remember what I said, the brief goal of this strategy, of course, is that we're looking for positions where hopefully the stock will move up, 5 to 8% within the next 30 to 60 days. Well, this stock has moved up 7.3% since we evaluated this paper trade on 5/25. Now might be a good time to evaluate what income methods, what adjustments might be available on this position. And to do that, we're going to click on the little blue button next to the position. You can click on the stock or the put, and I want to go to Position Actions. And in the Position Actions menu, this is where you can make a lot of your adjustments. If I wanted to just add an option leg to this married put, I know I'm going to sell the, let's say July, well, the stock's at 1396, the July 15 call. Well, I could just click Add Option Leg and do that manually. We can edit the position if we made a mistake entering the stock or the option price. If we're closing a leg or if we're closing the position, we can do that as well. What we want to look at right now is the position analysis. And this is available for all strategies, of course, not just the married puts, but all strategies you're tracking in the portfolio. What the position analysis screen is going to do is give us a breakdown of our current position. All right, so here's our original setup. GFI, remember, at 1301, we'd used 400 shares in this example, and we purchased the January 15 put for 289. Current stock price is 1396. As we saw, it's moved up 7% from our purchase price. The static break-even, as shown on our profit and loss chart, at January expiration is 1590. That's the total of the stock price plus the put price. We still have 227 days to expiration, and our maximum risk was 5.7%. Again, if the three conditions are met, if the stock's trading below $15 on January expiration and we've made no adjustments. So if I hold the position all the way to January expiration, we make no adjustments, the stock's trading below $15, we'll realize that 5.7% maximum loss in the position. Now as I scroll down here, we have a little bit more to the view that we saw on the portfolio page. Okay, so my original position price, well, the 400 shares and the 4 puts, that put us at 6,360. The current liquidation value is 2.5% after 12 days. If I sold to close the stock, sold to close the put, we take in 65.20. Maybe if this matches my goals, I'm comfortable with this, I can just take that if I want to. Probably looking for a little bit more when I open the position, but to each his own. And then, of course, the future expiration value, again, it's not projecting what the loss might be. It's just saying that if the stock stays at the same price all the way to January expiration, you make no adjustments, you might realize that maximum risk of 5.7%. But now down below is where we have the rollout opportunities. Okay? Now, these are not telling you recommendations or suggestions. These rollout opportunities here are following the rules of the blueprint for RadioActive Profit Machine. But it's still up to you to decide, again, based on the rules in the blueprint, which one matches your SIGA model, your conditions, your expectations, your goals, and your actions. Let's just take the first one. We mentioned that July 15 call. We're shown that right now, remember, we have a maximum risk of 5.7%. We're shown that we could potentially sell the July 15 call for only 29 cents and has 45 days to expiration. And the max return would be about 6.9%. But we're dropping our maximum risk down to 3.9%, 61 cents or 3.9%. Well, it's great to see everything numerically, but let's go ahead and take a look at that graphically. So now from the rollout opportunities, we'll go into Simulate Trade. And now we can analyze a side-by-side comparison for this position. On the left, in red, is our current married put. Again, the max risk of 5.7%. Current return if we liquidate it of 2.5%, and still a potential infinite upside profit. Over on the right, we're shown the new position. All right, if we applied income method number 1, if we sold the July 15 call, we now have lowered our risk to 4% or 3.9%, and we have a max return of 6.9%. Okay, and that's shown below graphically. Now, let's talk about these three one by one. The red hockey stick graph on this chart is showing you the current married put position at expiration. The curved black line, this curved black line is showing you what your gain or loss would be on the married put at 7/21, your current married put position. Why 7/21? Because that's the expiration date of the short call we're planning on selling. All right, so it's showing you the black line is going to show you a comparison against the blue line. And the blue line here, this is what your new position would look like if you sold that 15 call. So right now, let's just talk about the SIGA model. What are the current conditions? I opened an RPM with a 5.7% risk. The stock has moved up 7.3% to match my expectations. What are my expectations? Well, now here's the tricky part. If your expectations are that the stock is going to maybe move up a little bit more, it might move up to 14 or 14.50, but you think it's going to hold that price for the next 45 days, this might be an adjustment that might work for you. However, if you have the expectation with this particular trade that the stock might be trading higher, that you expect it to go maybe up to $17 or $18 in the next 45 days to July expiration, this is probably not the income method you want to use. And a lot of investors, a lot of radioactive traders will say, well, it's okay if it goes up to 15, you can always roll it. But yes, in the next 30 days, if I'm expecting it to be up to 16 or 17, I'd rather wait for that to come true. If it does, I know it's not going to necessarily. But if that does come true, I want to wait for the stock to move up to 16 or 17. Then I want to look to maybe sell the 16 call or the 17 call, get a premium, and have a wider range of profit on the position. I don't want to handicap myself if my expectation is the stock's going to move up. Okay, so we'll add those back in just real quick. So you have your original hockey stick graph, the curved red line, and then what your new position would look like in blue. And if you decided that this was the income method you want to use after you apply your SIGA model, you can just add it to your portfolio with one click, submit change to portfolio, and then now when I go back into the portfolio, what it would show me is that I have those other married puts, and it would show me one collar with the GFI stock, GFI put, and this GFI short call with it. Okay, let's close this simulation down. Oh, sorry, it does that to me sometimes. All right, let's go back. And there's also some other opportunities you see here for what's called income method number 3, rolling the put closer in price, what Kurt likes to call the bulletproof vest. Your eyes might be drawn to this right away because take a look at these two positions here. You see they're highlighted. They have a negative at risk. These are two bulletproof positions. Why wouldn't I jump on this right away? Well, because there is the trade-off. Those of you in the blueprint, you know what this trade-off is. What is the steps? It says you may consider exiting the position. You could sell to close your existing January 15 put and buy to open the July 15 put. This puts you at a guaranteed profit of 0.6%, but where's the trade-off? Now you're only insured to July. You've given up, this was about 227 days out to 45 days, you've given up about 190 days of protection on the position. Yes, it's bulletproof now, and you can bulletproof it to 1.3%, but then come July expiration, if the stock hasn't moved up further as you expected, you might liquidate for a 2% gain or a 1.3% gain. But if you're still expecting further on the stock, you'd have to rebuy a new put, and that would take yourself out of bulletproof status. So it's a trade-off. And, of course, those trade-offs are all described in the blueprint. But I just wanted to show you this. This is what's available. And not only in the married put strategy, if you're trading other trades as well, as you go into the position actions menu from your trade and you go into position analysis, you can see the breakdown of your position, the potential rollout opportunities, and then you can compare them side by side using that simulate trade feature to help you analyze which adjustment that's available best suits your risk-reward tolerance, your goals, and your expectations. Fortunately, we're not making recommendations or suggestions, but we're doing all the heavy lifting for you with all the new calculations for the new max risk. You can compare graphically side by side before you make your decision and help you maximize your trading. All right, well, we're about 10 minutes past. I'm going to navigate back over to our slideshow. I did promise that there'd be a Q&A session, so those 45, 46 of you that remained with me here, if you have any questions, send them in now, and I'll address them after I just do a quick review. So just go ahead and use the question pod there and send me any questions that you have. I think this slide is pretty self-explanatory. Of course, why power options for radioactive trades? Well, we're the only suite of tools dedicated to the techniques in the blueprint. Not only that, but Ernie and myself and the staff here at Power Options, we've all been trading this technique for 4+ years. So any questions that you have, you can call us up at any time and we'll help you by using the tools to help you see the side-by-side comparisons. Of course, the patent and search tools to help you find positions. You can use those default settings as a stepping stone to create your own personal search. You can customize searches. Sorry, you can customize searches and screen views to have that available. And then once you have that all set up, you have your search and you have your results table set up the way you want. One-click links for that further detailed research and comparison, time-saving tracking and managing tools in the portfolio, and then you can apply adjustments to your RPMs with just one click. Real quick review, the 20-minute delayed service on Power Options is $60 per month. We do offer a real-time service, so every time you submit the search or rerun a search, you see the numbers at that instant. That's only $20 more, $80 per month, or $880 for the year. And we do offer a service that has the real-time plus the historical suite of tools for back-testing purposes, historical search by symbol, historical search, historical option chain. That's $100 per month, or $1,100 for the year. Now, of course, the educational products. I see the other questions coming in. I'm going to get to those in just 1 minute. The educational products, of course, we have the blueprint. Talked about that. That's the complete guide. Talks about the setup, Kurt's approaches, the 10 different income methods, the SIGA model for each one, the radioactive mastery series CDs, the 6 video CDs. Each is over 2 hours long. Gives you some of the it gives you the details of the income methods, of course, but in a different media format. So if you'd like to learn by videos there, it'd be maybe a little bit better to go. And then the home study kit contains the blueprint and all 6 mastery series CDs. I want to go back very quickly here, and I want to go to radioactive trading. Let's just click on the products page. So we'll show this side by side. The blueprint, of course, is $339 plus $11 for shipping. And we do have a series of bonuses that you get if you purchase the blueprint right now. There's a set of bonuses that are available. So the blueprint teaches the setup that we look for, why we're using the setup, the full technique, the 10 different income methods. The home study course is $599, and then, of course, plus the $11 for shipping in the U.S. or $40 for shipping in the U.S. And this is a 35% savings, meaning if you purchase the blueprint and the CDs separately, it would be 35% more. In addition to the bonuses that you get, if you purchase the blueprint, the bonuses that we have right now is you get a free month of Power Options. Kurt's going to send you something he calls the Quick Action Guide. You can get a discount coupon for your first month of Fusion, where you can follow Kurt's trades and Ernie's trades and have some timed lessons for you available in the Fusion service. You can get your first month of Fusion for only $10. And, of course, it always comes with that money-back guarantee. But in addition to what's available with the blueprint and those bonuses, if you purchase the home study kit, still has the money-back guarantee, still has the other bonuses, but you also get a free consultation with Kurt as well. And then, of course, we have the Mastery Series CD promotions down here for all 6 of those CDs, each one about 2 hours long. Okay, so those are the educational products for radioactive trading. I just wanted to show you those. You can go to radioactivetrading.com and click on the products tab there and take a look at that also. Okay, wow, I didn't realize you guys had that many questions. Okay, Jerry first. Radioactive stocks were all above $50 per share. Why was there not lower cost stocks? There's some advantage to buy higher price stocks versus lower price stocks that have options. The reason why, Jerry, and I showed this, I don't know if you were with us in the presentation, that's one of the problems, I don't want to say problems, but that's one of the things that happens with the IBD 50 and CanSlim list. A lot of the IBD 50 and CanSlim list stocks are above, $40 or $50 per share. That process I walked through about how I changed the stock price to my personal range, then remove the IBD 50 and CanSlim list and put in the other stock criteria, that is what's available. Now, what is the difference? A lot of studies have been done. You can see these, not necessarily by Kurt or Ernie or myself, but a lot of studies have been done out there. And a lot of investors tend to feel the sweet spot for stocks, for good performing stocks, is usually stocks between the $50 to $90 range, or maybe the $60 to $90 or $60 to $110 range. They usually show the most stability and a lot of good growth. Lower price stocks, as you know, they're a little bit more volatile. Those $10, $15 stocks, and I got to admit, Every stock I trade radioactively is below $45 per share. I've got a couple open right now that are within the $35 range. I've got one in the $28 range, excuse me, $22 range. And what was the one? Yeah, there was a lower price one. I just forgot which one it is. It's around $11 or $12 per share. What's the advantage, disadvantage? Well, the advantage of lower price stocks is they tend to move more frequently. So you have some opportunities here to maybe grab an income method quickly, but they also have a tendency to move against you very quickly and drop quickly in price. And if you think about a $2 loss on a $10 stock, well, $2 loss on an $80 stock is not that bad. A $2 loss on a $10 stock, we're talking about a 20% decline. So that's the trade-off there. Okay, that link I get, oh, Christopher, you missed some of the webinar, some of the different parts of it. I apologize for that, and you had to go out of there for a little bit. That link, powerop.com/webinars.asp, that will allow you to access the webinars. Let me just do that very quickly. I'll show you two things here. Let me go back. Okay. Let's go to Learning Center. If you have a PowerOptions trial subscription, you go to Learning Center, click on Webinars. Okay, here's the webinars page, and over on the right we have these different archive settings: PowerOptions tools, option strategies, open discussions. Well, PowerOptions for radioactive trading. Here's one that was very similar to what we just did from 5/9/2012. I'm actually going to replace that presentation with the one we did today. That's the link there up top, powerop.com/webinars.asp. It's a public page. You don't need to have a trial account right now. But that's the powerop.com/webinars.asp. And around 5 p.m. Eastern Time tonight, you'll see that webinar available. Okay? All right. I can't see the name. Is this Nancona? Asks, can I sell more than one bear call spread above my put and ladder up? I don't recommend doing that. I do one bear call spread at a time, following the rules in the blueprint. I think it's too risky to have too many bear call spreads that aren't covered by the stock itself. So if I had 200 shares, I don't want to do one bear call credit spread, selling 2 calls and buying 1, and then selling another one that has another 2 calls and buying 1, because I'm increasing the potential risk there on the position. It could work out well, but I don't want to increase the risk beyond what I'm looking for. Jerry, I can't explain this any more than what I already showed. Jerry also asked, why do you wait until the stock rises to use one of the income methods? When we were on the profit and loss chart, I showed the exact reason why I don't do that. That income method number 1 trade, if I added it to that NGD position we were evaluating there from the beginning, handicapped my upside too much. It was ridiculous. If I have an expectation, as I was saying, that when I open an RPM, my expectation is the stock's going to move up 5 to 8% in the next 30 to 60 days. I know that's not always going to happen, Jerry, but that's what I'm looking to accomplish. If that's the case, why on earth would I sell a call right now that limits my upside to only 2% in the next 30 days and increases the maximum risk on the upside to 12%? If you force that income method too soon, you're going to change the risk dynamic on the upside in the direction you thought the stock was going to go, and you're going to handicap your profits. I wait for the stock to move up 5 to 8% or close to my put strike price before I make an adjustment. Well, that's what I wait for, and that's honestly the best way to do it. And the reason why I say that is because with my trading over the past several years, there have been a couple occasions when I've been in the same stock as a radioactive customer. I'm in a position that's up 6%. I have a 4% gain on my married put position. They jumped in and sold the call. They're actually at a loss at the point right now. If you force that too soon, then you can end up getting in trouble on the direction you thought you want to go. Pete asks on a different topic, do you have a recent recorded presentation of the Iron Condor service with Mike Phillips? Well, Pete, I don't know what you mean by recent. Let me go back to where I was here. I don't know where I was, where that window was. Let me go to Learning Center. Again, let's go into webinars. What you want to do, Pete, is on this powerop.com/webinars.asp page. Take a look at PowerOptions Applied Archive. We have these ones, Iron Condors, Part 1, Part 2, Part 3. I don't think we have anything more recent than that it's time, Pete. But you can take a look at those. And if those are the ones you're already referring to, then that's what you'd be looking for. Ooh, good question. Christopher, good question. I'll do this very quickly while I'm here. Christopher asks, also, do you find many ETFs with RPMs? I can, okay, if I want to look for a dividend-paying RPM. Or that's one of the RPMs I have right now. You heard Kurt mention that yesterday if you were with us on the webinar. I have an RPM open right now on SH, the inverse ETF. basically kind of playing the SPY on the bearish slide on the past few days. You can use those, but you want to use a little bit of different settings. And what I recommend there, we're back into our default search. Just went back to the radioactive trades. If I'm looking for ETFs specifically, what do I have to do first? I got to remove no lists. There's no ETFs in the IBD 15 canceling list. I want to change this to no lists. Historical volatility, typically have to wipe that out as well. Average stock volume is good. The risk is good. Let's just do that. Stocks trading above the SMA 50. We'll probably get some bearish ETFs in this general search now. Well, there's a lot of stocks in here. I have 276 results. I don't see any ETFs here, but let's narrow it down. Let's make it a little bit more simple for us. In that recommended list field, just change this to indexes and ETFs. What have we got? Anything? There we go. 39. A lot of them are on GLD, of course, and TLTs there as well. If I go to page 2, I'm surprised I'm not seeing any of the bearish ETFs, but then again, not too much. Oh, there's the ultra-short Euro, NASDAQ Biotechnology. There's SH, and DOG is there as well. Okay, so you're just going to have to change the criteria a little bit to identify them, because they're not going to be in the IBD 15 canceling list. They will appear when you open it up. Zane, excellent. It was a good talk we had the other day, and I'm glad to see you on here. Thanks for the info. This has helped me understand as you're currently reading the blueprint. Fantastic. I'm glad you got a lot out of this, Zane. Peter, no, we do not. This is not a trading platform. PowerOptions is a suite of tools designed for self-directed options investors. We are not a trading platform, unfortunately. If you're using Options Express or Brokers Express, we do have that broker link set up for you that you can use to help you one-click trade to those, and we may be expanding that hopefully in the near future. But we are not a trading platform. We're just tools to help you research and analyze your positions and identify the different strategies you might be trading and help you track and manage the positions with the portfolio. All right. Okay, well, that looks like all the questions we had. And, of course, you guys, if you have any other questions later, please send me an email to support@powerop.com. And tools regarding power options. You have tools about the radioactive trading techniques, that blueprint offer I mentioned, or the home study kit. Send me an email to support@radioactivetrading.com, or send it to Kurt as well, support@radioactivetrading.com. And, of course, feel free to call us during market hours. You can reach us if you live inside the continental U.S., toll-free at 877-992-7971. Or if you live outside the continental U.S., you can reach us at 302-992-7971. Of course, there's contact links at the bottom of every page. Ladies and gentlemen, I want to thank you for joining me, and I thank you for all the great questions at the end there. Jerry and Peter and Mike and Frank as well. Thank you guys for all the questions and the participation. Remember, tomorrow at 12 noon Eastern Time, Kurt's going to be hosting the radioactive trading presentations. So you want to make sure that you join us for that. And, of course, Friday at 4:30 p.m. Eastern Time, I host that open discussion Q&A session for power options and radioactive trading. So join us as well. We'll see you soon, folks. Happy trading. Take care. And just send me an email or give me a call anytime you have any questions. Good night.